Good day all, and welcome to this channel. Today we'll delve in properly into the advanced technical aspects of the gold pro scalper. The first thing we would like to call the attention to is that when reviewing trading statistics, we should always try to look beyond the profit and loss, and instead focus on the metrics that reveals the sustainability of the strategy, the risk, the consistency of the strategy. Now, because this is so, because some people are already getting carried away with the performance displayed so far. Though it has been an impressive performance, having over 40% in a couple of weeks, as it is also illustrated here. And though we would be calling our attention to more to some area of concerns. Now, the most important thing to check is the expectancy, which is here. The expectancy, when we see an expectancy on our trade statistics, and this is just this metrics shows us how much you can expect to win or lose per trade. So it is it shows us what to expect to win or lose per trade in dollars or in whatever currency you are using over the long term. So, and then when the expectancy is genuine and if it is genuine and profitable, now you would see the amount, which is this, that is on average you are expected to make $0.76 per trade. That is the expectancy. So if the expectancy is 0 or minus 0, then you are not making any profit on that trade, on that strategy. Now that is the main thing. Now that we've confirmed that expectancy has showed us that there is a high probability we are making profit per trades on the strategy. Now would delve more into some other metrics to consider. Now we can see we have a profit factor here. We have a profit factor. Now the profit factor says that it is just showing us how profitable the trading strategy is. So it is the accumulation of the gross profit divided by the gross loss. So, and when you compare both, so it is telling you, I think it is telling you how much you make on winning trades or how much you are losing on losing trades. So if the profit factor, now as it is here, if the profit factor is below 1, let's say it is not up to 1, now that is a very poor strategy. That is a losing strategy. Now if it is 1, if it is a 1-0 number, now that is a break-even strategy. Now, but if it is above 1, now that is a profitable strategy. Now, if depending on the margin after 1, if it is 1.5, anything 1.5 is considered a very profitable strategy. Even 1.3 is considered a profitable strategy. But now that we have 1.8, so this is showing us that the strategy is very much profitable, and which is also backed by the fact that we've made over 40% within a couple of weeks. Now we would also check for the drawdown now, because we want to know how exposed is our capital to the market, how exposed are we to the market. Now we have our drawdown here to be 5%. This was also mentioned earlier. So 5%. That has been the maximum drawdown over the couple of weeks. Now we also have our win rate. We also have the win rate. We have buy positions at 50% and sell position at 57%. Now if we are to divide this, would be having around 53% win rate. Now let's not get carried away with having 80% win rate, 90% win rate, or 75% win rate. A 50% win rate will also be profitable. Now the main thing is, that's why the first thing I mentioned is the expectancy. What are we exposed to? What are we gaining in every position, and what is the potential? What is the potential of gains we are making, and what is the potential of loss we are making? And since we have a positive expectancy, a positive profit factor, then we are confident that we are on the right path. Then we can also check worst trade. Let's take the average trade. Let's check for the average trade. Okay, average wins and average losses. So this is the average win, this is the average losses. So on average we are making $3, and then on average we are losing $1.8. So these metrics alone has shown us the intricate aspects of the strategy. So we hope this has answered the questions some technical experts have asked regarding the strategy.